So, I've been talking about tools that help you manage the mountains and mountains and mountains of data that you have access to in business. And like I said, keep all the data you can get your hands on that's legally permitted. But then, if you use a tool to mine that data to actually go into it and do a lot of the sorting, the referencing, tabulating, cross referencing, that sort of thing, and you let a tool do that work for you, then you'll find that you will be doing a lot more of that work. I mean, humans don't like to do that sort of work all the time. We like to move on to thinking about what's in front of us. So I would say one of the most powerful and important tools in the entire world, probably the most important tool for businesses, is by Microsoft, and it's called Excel. You've all heard of Excel, you might not know how to use it. Of course, starting today, I'm going to assume it is completely new to you, and I'm going to start from zero. So today will be an introductory session. Those of you that know parts of this Excel, the basic stuff from today, please just use it as a checklist to say, yeah, okay, I know it. I know those basics. And as we add layer upon layer of new material, you ask yourself, okay, I can do this with comfort, with confidence, or maybe this is new to you, and then you just do the practice around it. So this video will be posted in the week session along with the actual Excel file. And remember, there are also smaller tutorials related to small things that we do within the spreadsheet that can help you as well, and I'll put those all in the week session. So let's have a look. First of all, Excel is powerful stuff. It's portable, it's cheap, anybody can have access to it, and it could do a lot of things. Now, that's not to suggest that you are not using other systems. You probably are. Other systems like database, like SAP, PeopleSoft, Oracle, there's a lot of them. You might be using a different transportation system, a custom system, whatever it might be, MSR. But you find that those systems can't do absolutely everything that you would like it to. For example, in SAP, because you're learning SAP environment, there might be some sort of custom work you want to do that SAP doesn't. You can always pay people to program and customize it, but that costs a lot of money and it takes time. So quite often we export data. We grab data from other systems, we bring it into Excel because it is a familiar environment, and you'll be surprised what you can do with it. So first of all, if you don't have Excel, please download it. The college is providing it to you for no cost. And I would prefer that you didn't use the Google Sheets version of a spreadsheet. That doesn't work for us. So it is the actual Excel that has the most power and the most functionality. So once you double click on the Excel icon, you will get a screen that looks something like this. And you will get an option for a blank workbook, and quite often you'll get options for a lot of templates over on the right as well. Those you can play around with if you want, but we're going to learn this from scratch, from zero. So we're going to double click on the blank workbook, and keep in mind this is very basic. We're going into a very basic scenario here, and I'm just going to zoom it out. So look at what's in front of you. It's a whole bunch of boxes, or what we call cells. And there's letters across the top. Those are columns. A, B, C, D, E, F, G goes all the way to Z, Z. That's about 650 of them. And then you've got numbers on the left, and these are called rows. 1, 2, 3, 4, 5. I don't know. There's a lot of them. Okay, so I don't know if there's like 6 million. It doesn't matter, however many there are. Idea is to put one record on each line. So if you're dealing with products, it will be one product per line, one order per line, one person per line, one customer per line. Okay. Now, where a column meets a row, like here, that's called a cell or a box. And that cell has an address, like B3. Okay, B3. This one is A3. This one's A5. This is C6. It's important that you remember that, okay? Now, in a cell, you can have nothing. You can leave it alone because there's millions and millions of cells, right? Now, keep in mind, this is a pretty big universe. It's a pretty big sheet if you go all the way from corner to corner. Excel wasn't just designed for you, for business. It was designed for scientists and mathematicians and economists. They might use that space. In fact, if you look at all the features and buttons across the top, all these tabs, there's so many things up there that we're not going to get to all of them. A lot of it's just not for us. So if you get to a spot and you look at it and say, I have no clue what this is, don't shy away. Don't be scared by what it is. Stick to what I'm showing you. Because by the time I'm done, I mean, look, you're not going to become an expert in Excel. I mean, even if you go to medical school, you're not going to become an expert doctor. But what I need to give you in the few weeks that I have with you is exactly and just what you need to get into that job, to get into the job market. And in fact, I've had graduates who come by and say, my God, the stuff you taught me in Excel, that's what got me the job. I talked about it on an interview, people liked it on my resume, and that's the work I am doing. I get other people who come by and say, look, you know what? I'm showing people in my department who've been there for years how to do stuff in Excel, and their jobs are that much better. They're that much more efficient. And then, of course, over the years, you discover new needs and you discover new uses for Excel, and you figure out, you do a YouTube video, you email me, whatever, I figure it out for you. But you then say, hey, this is going to make my life a lot easier. Because your boss isn't going to say, hey, do this job and use Excel. They're going to say, get this job done. And it's up to you to figure out the best, most effective and efficient way to get the job done and get more of it done. And Excel just happens to be one of those tools. Right? So let's have a look. You can have nothing inside a cell. You can have a space, a character, a word, letters, or you can have numbers. When you put numbers in, Excel really shines. It says, wow, I like these numbers, okay? So we're starting basic. Now let's start on the first cell here. We're going to type in a name of our company, and let's call it Senco Profiles Inc. or Industries or whatever you want to call it. I'll put a good title like 2018 to 2021 inventory and logistics. I can't spell. Analysis. And then I want to date stamp this. So I put in a title, no big deal, right? Take a look. This title, the entire sentence, is in cell C1. See up here? In D1, there's nothing. In E1, there's nothing. So don't put anything there. Just move over to the side. Now I want to show you the first of automated functions. Now we're going to go through about 15 different functions in Excel, ones that I know can help you. There are more. Later you can learn a few more, but about 15 or so that'll help you. Now a function is called plug and play. You plug it in, which means type it in. You press enter and you play with it, means it works. Some of them are super simple. Some require a little bit more work, but they're all understandable. And I'm going to show you the easiest one of all, okay? I want to automate a date. Now, to start a function, you need to put an equal sign first. Just like a formula, you need to put an equal sign first, followed by the name of the function, a word. And the function we're using today is NOW, okay? Now, a function after the word must have a bracket, so that's shift 9. And usually we put something inside the bracket, but today, this function doesn't require anything, so you just close the bracket. See how simple that was? Now, do you memorize that? No. Can you write it down for reference? Of course. But the more you do, the better you'll know it. So now take a look. I plugged it in. I'm going to press enter, and you play with it. Now, I'm getting hashtags, number signs. Don't worry. It just means whatever's in it doesn't fit. So you go between the G and the H. You see up there, the columns? Just click your mouse and just stretch the column over, make it bigger. There we go. All right, see, if I make it smaller, you get hashtags again. So you make it bigger, or you just double click really fast. Now, I don't like this date and time, so I'm going to format it. So step 2, move your mouse inside the cell and right click. That's your other mouse button, you see? And quite often, new learners of this software, or any software, look at a list that pops up like this and say, oh, but I don't know what all this stuff is, and they get confused. Don't. Please don't. Stick to what I'm showing you. If you don't know what a filter is, let it go until I get there, okay? I want you to go to Format Cells. That's simple. That's it. That's all you need to know right now. Click, and you get this box. Now, in here, it's asking you, what do you want to format the cell to look like? Because format means just look. It means look and feel, okay? So out of all of these, and we'll go through most of them, but out of all of these, take a look. We want date. So you have to just wait, be patient, ask yourself, what is the format? It's date. Inside date, we have different types. And this is the type that I like. and you'll like it too. Probably because it's the most effective way to type in a lot of dates. So if I gave you 1,000 different orders to type in or shipments, that's probably the fastest way to type it in, and it is called medium date format. Okay, so there we go. That looks a lot better. Let's make it a little smaller again. Now we have the name of the company, the title, and the date. And you could put a logo up there as well if you like. Okay, now I'm just going to cheat a little bit. I've already typed in a bunch of things. So our company, Senco Profiles Inc., has distribution centers, 5 of them in Canada. If you don't know where all these cities are, you should know Toronto because you're living in it, or you will be. But have a look at the map. Okay, don't just say, oh yeah, Vancouver's somewhere. Please have a look, Google a map, find out where it is, find out where the ports are, the rail infrastructure, the population maybe. But each of our distribution centers has a factory attached to it, and each factory makes the product. The product then goes into the distribution center, which is the warehouse, with all your vehicles, delivery vehicles, trucks, moving equipment, handling equipment, packaging equipment. Now, warehouse also does quality control in this company. Okay, so the manager of this would be a director of logistics, or manager in each center. And at head office in Toronto, there's also a director of logistics for all of these centers. Okay. Now, what other information do I have? I have starting inventory, and I'll just take these commas out. Just there we go. Okay. I have starting inventory in each warehouse. So let's say our fiscal year is January 1st to December 31st. So on January 1st, in the morning, we have this many units in inventory. These are good units. Now, I'm going to put up more information here. This is the number of units that were produced throughout the year for the 1 year. Okay, so we had so much to start with. So in Toronto, we had 120,000 units from last year, which might be a good or bad decision. I mean, if you think about it, if at the beginning of this year a company had 120,000 extra masks in their warehouse, that would be awesome, right? Because they're about to sell them. Then there's gross units, units that were produced. They were actually manufactured throughout the year. Now, that doesn't mean we store them all in the warehouse. It means they're being sold throughout the year, okay? We don't worry in logistics too much about that until the order comes through. Now, out of those gross units, these are the number of units that were rejected. Now, reject means that it was defective in one way or another. Now, for some reason in this company, the quality control department, the inspection department, which isn't really a big deal, but they look for things like dents and scratches and tears, things like that. So if a unit was completely rejected, it will be 100%, one unit. But sometimes you have a unit that's 50% rejected, half of it. The other half can be repaired. And 2 of those would be 1 unit. Or if it was a minor scratch, 5% reject, 20 of those would be 1 unit. So we have the number of rejected units as well. Now, I'm just going to bold these because we didn't calculate anything. These numbers are just typed in. I typed them in for you. Now, we're just going to play a little game quickly because I want to show you how differently different people make decisions. I got an order, or all of these managers got an order from the director of logistics at head office to close 1 distribution center. The president seems to think that we have too many DCs. We only need 4. Okay, so the company wants to cut costs and maybe streamline a bit. So just based on the name of the city, I mean, this is weird. Don't even look at the numbers, okay? Which one would you close? Yeah, managers do that all the time. They just randomly close something. I'm going to say Calgary, and I'll make it yellow. Now, based on starting inventory, which one do you close? Ottawa. Why? I don't know. Like I said, stupid decisions get made, right? Now, this is an important decision. Based on gross units, which one gets closed? Now, our strategy at this point is raw production. We are ramping up production and we just need sheer volume, tons and tons and tons of it coming out. It doesn't matter where, what, we just need a lot of it. We need the largest capacity to stay. The lowest capacity is Halifax, so we'll close Halifax. meaning I'm only going to be left with facilities that have high output capacity. Okay? Now, this one becomes the most important. If my strategy is quality and quality containment, then Toronto would be shut down because they have the worst quality rate. That's stupid. I get it. Any one of you should know that looking at simply a number of rejects is not good. Because of course Toronto is going to have more rejects. They have more gross units. But like I said, people make this decision all the time. Right? Here, I'll give you an example. If you're taking 3 courses and your average mark is 78, but another person's taking 6 courses and their average mark is 75, does that mean you're better? No. No. It means the other person might be better, but remember, they have a burden of 6 courses. So, of course, you got to scale that up or down. So, what we're going to do is calculate. Remember, we're doing very basic. We're going to calculate net units, and then we're going to calculate percent rejects as well. So, let me just show you those 2 columns. Now, normally I just type in the word. So, I just copy paste it. So, something like this, percent rejects. See, 1 word per box, and you're good to go. Now let's figure out net units and do our first calculation ever. There's 2 parts to any calculation. One is the logic, the idea, and the other one is the mechanics, or how you do it in Excel. So let's look at the first one. Anytime you see the word net, net just means that we took a number and took something out of it. For example, your net income would be your gross income, the amount of money you make, minus taxes. Right? That would be net. You can't spend gross. You can spend net. If you spent your gross, you'll have nothing left to pay your taxes. In this case, we produced in Toronto 345,000 units. What do we take away from it to make it nets? We take away rejects. So gross minus rejects will give you net. Now here's how you do it on a calculator. You would type in 345,000 minus 12,500 equals. But in Excel, you go backwards, okay? You start equal sign. Now just hang on, I'm going to show you the wrong way. But you do this, 345,000 minus 12,500. Now that will work. That will work. See, the answer is 332,000, right? But from now on, you're never going to do that. Let me just undo. Take a look. I'm going to double click in this cell or look up here. But if you double click, you get to see your calculation. That's okay. Just to get a simple answer. So on the side, you can do a quick calculation like this if you want. But think about it. If I change that gross units number or the rejects number, these numbers won't change. And you're not going to remember to go and change them. So we're going to tell Excel to take this cell right here, C5. Now, I just typed it in, but you can easily just click on it. Now, by typing in C5, it will use whatever number is in C5 because a number might change, but C5 is never going to change. It'll always be there, okay? Minus D5. Got it? Same answer. But take a look. If I found some extra units that were rejected, somebody hid them at the back, and I change this number changes automatically. Do you see that? I'm just going to undo. There we go. That, well, you just did programming, really. Basic. It's relational. But that's the power of Excel. Now, if I had, right now I only have 5 DCs. But imagine you had 5,000 stores or 10,000 stores like Walmart. How do you get the next one? So if this is C5 minus D5, Vancouver is going to be C6 minus D6, C7 minus D7, and so on. You don't need to do that. This will copy down automatically. And I'm going to show you the quickest way to do it. Take your mouse, move it to the bottom right-hand corner of that cell. You see that cell? There's a little box. And you'll see a little thin plus sign. You click the mouse, hold it, drag down, and let go. I'm going to undo. Or, if you really want, move your mouse to the bottom right corner and double click really fast. Now, between now and next session, I want you to practice that copying. Because next time when I say copy down, just copy it down. Okay? So again, simple. We're doing simple stuff today. But these are my net units. These are the actual number of units I can sell. If we sold these units, customers are going to return your rejects anyways, or they're just not going to like your order and they're not going to order again. These are the units we can sell. And you still can't shut down a facility based on this, to be honest, okay? But if we calculate percent rejects, so now the number of rejects are relative to how much was output. So if you're outputting very little and your rejects are high, your percentage of rejects are going to be high. So now this number makes a lot of sense to calculate, because we as humans, in our head, you can't do that ratio. You can't divide these two numbers quickly in your head, because then you get a relative reference of comparison, right? Now, a reject percent, or percent reject, which is a ratio, and a ratio is simply something out of something else, a ratio. For example, if you spent $30,000 on food out of $100,000 income, the ratio you spend on food is, well, 30,000 to 100,000, or 30%, right? So it's the 30 divided by the 100. In this case, we want to know what percentage of our gross are rejects. So you divide rejects by gross. So I'm going to start with an equal sign. D5 divided by C5. See, so this is the divide sign now. Got it? Forward slash is divide. So rejects out of gross will get you a number. Now I'm just going to undo the formatting. There we go. Okay, we're going to copy this down. Now that number is fine. It is a percentage, but I don't think we like looking at it in a decimal format like this. So I'm going to highlight these cells. See, now highlight is the white plus sign, right? And if you go to the top of the screen, I want you to become very familiar with these buttons, 5 buttons. There's dollars, there's percent, there's comma. So if the number is $1, do dollar. If it's a percent, do percent. If it's just numbers like units, do comma. And then these are your increase and decrease decimal buttons, okay? You're going to play with these. So percent rejects is percent. I clicked it. Look, it didn't round anything up. It just looks like it. But I obviously want more than 0 decimal places. 3 is too many. We'll go to 2. And you ask yourself, how many decimals do I need? Well, it depends on how big the number is. These are relatively small numbers. And also how close the numbers are together. 3 and 2, 3 and 2. They're pretty close. So I would probably go 2 decimals on this one. Okay? Now see all of these other numbers? I'm going to highlight them all. They are all units. Unit, 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 unit. So I'm going to highlight them and go up here and click the comma. And make it 0 decimals. You see how automatically you get 2 decimals? Make it 0 decimals. Now this became hashtag simply because you added a period, a comma, and a 0, 0. So by making it smaller, it will fit. Okay? Now that looks a lot cleaner with the comma every 3 digits. That's not bad for basics, right? Now I'm going to pop up some additional values here. Just let me just make them all red because I want to move on. So when you're doing this exercise as a practice, if you like, no problem. You can type these in or just leave them. I'm going to make all these bold. I'm going to share this file with you. Now, if we produce 332,500 net units, oh, by the way, in terms of rejects, it would be Ottawa that would be shut down because they have the highest percentage rejects, right? And I'm just going to clear out all these yellows. We're not going to shut anything down. Now have a look. At the end of the year, if you were to count all the units sold, then this would be it. Now where did this number come from? I just gave it to you, okay? So some numbers are source numbers. Somebody just gives them to you. Sorry, let me just fix these titles for you. There we go. Yeah, I don't know why this is coming up. That's weird. Okay, don't worry about that for now. I'll fix it. But we sold this many units and the customer returned this many units, okay? Sold and returned. Now I'm just going to fix these, make them commas. So you can do all sorts of analysis on percentage of units returned and so on. Now, that's not necessarily your concern. That's more marketing and sales. But I want you to keep this in mind. The activities of marketing and sales heavily affect you, because when those units get returned, guess who gets to handle them? Guess who has to process them, even right down to inspection, is your department. So now your bottom line gets worse because you're spending more time, energy, and resources returning these units, processing the returned units. Now, how many did we actually sell? And so sell minus returned. That's the actual number of units sold. Okay, let me copy that down. Got it? Now, the COGS is for this many units sold. Now, quite often we take a penalty for the return, so handling charge, whatever. We might actually include that in cost of goods sold. It doesn't matter. Accounting gives us this number. But I do want to calculate revenue. Now, I could have just given you revenue. I get it. But in our company, we sell the product for exactly the same price no matter where it is in the world. It's called a global price point. And a lot of companies do it, like Apple is pretty good at that. I mean, you can't buy a legitimate Apple iPhone for a price that's too much cheaper anywhere in the world. Okay? So what we're going to do is we're going to take each unit, so that's I5, and we're going to multiply it by $310. Now let me just repeat. Our company sells the product for exactly the same price all over the world, and mostly in Canada. And it's $310 adjusted to the Canadian dollar. So the number of units sold times 310. Now, do you see what I did? That star, that right there is multiply. And to get the star, you press Shift 8 or go on the right side of your keyboard. It's right above the number 9. So I5, that is not 15, that is I5 times 310. That's my revenue. Now I'm going to copy that down, and that's my cost of goods sold. Now these two numbers are dollars, right? Revenue would be dollars, cost of goods sold is dollars. So look what I'm going to do. I'm going to highlight these, go up here, and use the dollar button. And again, we don't want 000 decimals, so we're just going to make it like that. So in Toronto, I had $121 million in revenue. My cost of goods sold was $49 million. Now, I want you to think about what revenue is. In this case, it's revenue associated with the selling of the product. We sell something, that's revenue. But if you think at a law firm, that very first company I used to work at where lawyers were selling their services, we didn't sell any good. Our product was a service. Our revenue would have been legal fees. Seneca, what's our revenue? We have revenue of $510 million. The biggest portion of that revenue is government funding. Second biggest is student fees. But then we also have other revenue streams. We charge rent to Tim Hortons, a coffee place. We get parking money, a bookstore, that sort of thing. Okay? So that's revenue. Cost of goods sold, COGS, cost of goods sold, is any cost directly related to the sale of a unit of product. So that would be, let's say, the raw materials that go in. You learn all about this in accounting, right? Raw materials that go in, portion of your hydro, heat, insurance, your manager's fees, the warehousing, anything related to the production and movement of that product will go into cost of goods sold. It could even be a portion of the president's pay, because if they're directly related to running the company, it could be that. So we look profitable, right? So that's my revenue, that's cash, minus we have to pay out the cost of goods sold. Minimum you have to pay out what it costs you to buy the product. So for example, if I was just standing there outside near a park and some guy ran and said, "Here, you can have my watch for free." And he gives me a watch. He says, "You can have my watch for $5. I go, "Okay." He says, "I'll come back tomorrow for the money." Then I said, "Okay, no problem. I'll give you the money tomorrow." But I realized, wait, I don't need this watch. So I'm just standing there, and within 3 seconds, another person walks by, says, hey, cool watch, I want to buy it. How much? Now remember, you already told the other guy you'll give him $5. But within a few seconds, another guy says, I want to buy it. How much? You say, okay, $10. So he gives you $10, you give him the watch. It did not cost you very much in resources to make that sale. You were just standing there anyways. Maybe if you bought like a $1 bottle of water because you were thirsty, you can add that to a cost, I guess. You didn't spend money to fix the watch or shine it or package it. So you got your $10 in your pocket. That's your revenue, your sales. Now you can't spend that $10. Why? Because as a minimum, you owe your supplier, the guy who gave you the watch, you owe him $5. So you have to reserve $5. It's called a payable. And tomorrow when he comes to collect it, you have to give him the $5. So you are now left with $5. So that's good profit. You just made 50% profit. You marked up the price by 100%. You went from $5 to $10, but your profit is $5. So let me write this down. Profit equals sales. And sales could mean revenue, right? Sales minus costs. In this case, cost of goods sold. So let's figure that out. So we're going to call this gross profit. And don't worry about the number 3. Profit. So J5 minus K5. Press enter. There we go. Let's copy this down. Now, I could ask you, are we healthy? Are we profitable? And you could say, yeah, heck, $72 million in gross profit. Total is $170 million. We're profitable. Maybe. Doesn't really tell you the health of the profit. It just says, yeah, so we're cash flow positive and we have money coming in. No problem. In fact, we are doing well. But that's gross profit. Remember, anytime you see the word gross, you have to take something out of it to become net. And from this, of course, we're going to take things like taxes, deferred payments, insurance. There's all sorts of things out of this we have to take to make it net. Net is the actual amount of money a company can spend. Now, this really doesn't give us a relative look at profit. So if I were to say, which distribution center is the best in terms of profit, you would say Toronto. It's the highest. And the worst is Ottawa, which is fine. That's more about contribution. Toronto is the highest contributor. Ottawa is the lowest, but that doesn't give you any indication of health. So we're going to calculate what you call profit margin. Now, profit margin, see, if profit is sales or revenue minus costs, profit margin is profit divided by sales. Okay? Now let me explain how this works. If my profit is $72 million and my sales is $121 million, the word margin means percentage. So imagine the $10 bill, actual note, that you got from that person who bought your watch. I want you to fold that bill to represent how much of it you owe the supplier. And you fold it in half. Because half of it you have to give to your supplier. The other half is your profit. You get to keep it. That's the margin. So imagine a piece of paper has a margin on the side, right? The margin is the portion you get to keep. In this case, profit margin is always a percentage. So if I take $72 million profit, divide by revenue, that will give me the percentage of revenue you can keep. Again, the idea is, if you had $121 million income, $72 million was spent on food, it will tell you what percentage you spent on food. 72 divided by 121. So in this case, profit margin would be profit divided by revenue. Or, okay, PM. Now I want to show you this way as well, because you might not have profit calculated. So profit margin equals sales minus costs divided by sales. So if you had to figure it out without having profit, then you would do it this way. Now we're going to talk a little bit about why we use brackets here, okay? In fact, I'm going to put up a tutorial on order of operations, or what we call BEDMAS. If you go back to grade 4 or grade 5 math, you know that computers all over the world will not do the math in the order that you put it. So I'm just going to remove the brackets here just to prove it to you, okay? Computers are trained, in the entire world they're trained to do add, subtract, divide, multiply in one way and one way only. Divide, multiply will always get done before add and subtract. Always. Even though it's after and backwards, it doesn't matter. So in this calculation here, take a look. It will do costs divided by sales before it subtracts. All right? Which is weird. I mean, you take cost divided by sales, that's some number, and minus that from sales, you don't know what you're going to get. But we as humans, we know that we have to do sales minus costs first. And whatever number this is, divide that by sales. And in order to make that happen, you put brackets around this. Okay, so brackets, whatever is inside brackets, always gets done before anything else. Now let's go over here and plug this in into margin, okay? So I could have just done profit divided by revenue. I'm not going to. In fact, you know what? I'm going to delete this column. And to delete a column, you just right click right there on the column and delete. Okay, I don't want it. Now I'm going to do, let's make this bigger, equal. So it'll be sales J5 minus costs K5 divided by sales J5. Memorize it. Sales minus cost divided by sales. Sales minus cost divided by sales. Again, other words for sales would be revenue, okay? Now in this formula, it's going to do K5 divided by J5 and minus that from J5. You're going to get some sort of weird number. That's not good here. You know that doesn't look right. So don't forget, because you want this to be done first, you want to put brackets around it. Now, I am going to put a tutorial explaining this in detail. It's called BEDMAS, BDMAS, brackets, before division multiplication, before addition subtraction. Take a look. Now, you know the margins of percent, so quickly format it to percent, and I'm going to do 1 decimal. Let's copy this down. Now, take a look. Here's what it means. Out of my sales, my revenue, this is the percentage of money that I can keep. So this is actually gross profit margin, just to let you know, gross profit margin. Because from that, we have to take away taxes and insurance and all sorts of other things, right? Your accounting people will teach you that. This is the percentage of money I can keep. I can do something with. So the healthiest profit is being generated by Halifax. The least healthy is Ottawa. Toronto's not bad. But on average, we'll calculate average next time, but average is 56.8. Now you can ask yourself, are you happy with these profit margins? Yes or no? Maybe, maybe not. Now, what do you think a good profit margin is? And a question I would ask you is, what is the maximum profit margin? And if I ask you, some people would say unlimited, some people would say 400 or 500%, some people would say 100%. You know who would be right? 100%. You cannot have, legally, you cannot have a profit margin more than 100%. Think about it. Look, that person who purchased the watch gave you $10. $10 is 100% of your revenue. How can you keep more than 100% of your revenue? How can you keep more than $10? So profit margin cannot be more than 100%. You can't keep more than 100%. Now, there's some businesses who generate 1 or 2% profit margin. There's businesses that do upwards of 99.8%. Like my firm, I have a consulting firm. It's just me, by the way. My costs are super low. I have a cell phone. Sometimes I drive around. I pay for internet. But when I charge a customer, I send them a bill, my fees, that's my revenue. Very, very little of it goes towards the actual cost. Of course, I pay myself, that's a different thing, right? But I'm not a corporation, so I don't have to account for it that way. So I get to keep upwards of 80 some odd percent money. But if you go to a gas station, just on the gas alone, you know the gasoline that you put in your car, it's like $1 a liter. A lot of it's taxes by the government. The margin to the gas station owner is so small, it's in that 1 to 2% range. You'd say, why the heck would I buy this business? That's low. But remember, it's volume. I'll take a 1% profit margin any day if I'm generating millions and millions in revenue. Think about it. So I want you to think about that. And the other thing I want you to think about is next time you go to Tim Hortons or Starbucks for coffee, ask yourself, what did I just pay for that coffee without tax? And how much actually goes into making that coffee? The cup, the lid, the water, the actual coffee, maybe the sugar, maybe the cream, maybe the sweetener. Those are variable costs. And a medium double at Tim Hortons would be like $1.85, including tax. So let me just do this quickly. The tax is 13%. So you're paying $1.64. Out of the $1.64, your total cost of goods sold, including a portion of the rent and the person making and serving the coffee, I would estimate would be in that about 32-cent range. Depends on the location. So your markup is a lot. You're going from around 32 cents up to $1.64. Your markup is what? 400%. But the margin that you get to keep, I'll just quickly do it. 0.32 is 1.64 minus 0.32. I got $1.32 I get to keep out of $1.64. 80%. Not bad. But remember, out of that 80%, there's a lot of other costs that are very expensive for that company, right? So it's not bad. It's a good business to be in. So I'm going to leave it at that. This is just a good start. If you got all of this, awesome. Move on. Next week, we're going to add more. If you didn't get some of this, then please go back to the sheet, rewatch my videos and the tutorials, and try to perfect it. Try to become confident with it so we can move on next session. Okay, for example, if by next week you can't copy things down or format for percents or commas, please practice the date, things like that. Okay, I'll fix these headings up at the top, don't worry, and I'll save this file for you. Okay.